My trading strategy is very boring and very simple to execute, but it has allowed me to withdraw over $300,000 in payouts from prop firms. Prop firms as well known as Funded Next, FTMO, and Alpha Capital. In fact, just with Alpha Capital, I've withdrawn a total of over $90,000 in payouts. I'm not making this up, I'll show you right here. And besides, I've even made it into their top weekly payouts twice. You can see it on their Instagram, but if you don't want to look it up, I'll show you here as well. That Benjamin you see there, that's me, and I achieved it with the trading strategy I'm going to explain in this video. A strategy where you only trade for 2 hours during the London session or 2.5 hours during the New York session. More than enough to achieve these results. If you want to know the step-by-step of my strategy, stay tuned to this video because I'm going to explain absolutely everything. Let's get started. Now, let's really begin with what you're actually interested in. This trading strategy with which I've withdrawn so many payouts as I've already shown you. And by the way, if you want to see more content and get a deeper understanding of my strategy, I invite you to follow me on Instagram, which you'll find linked below in the description. There, I post almost every single day all the specific trades I've personally taken during the entire day. I explain them completely and thoroughly for absolutely free, and this valuable information will also significantly help you to understand my comprehensive trading strategy much better. Now, what is the very first and most important thing we're going to do on our trading chart? Well, personally, I exclusively and only trade the euro-dollar currency pair. Why? Basically, this is because it is the primary currency pair with the absolute highest trading volume in the entire global financial market. Therefore, it's the pair that, out of all the manipulation present in the markets, is the least manipulated. If we move to more volatile currency pairs, obviously we might see bigger results, but we'll also face very volatile movements that make it much harder for us to enter and participate in the market. Therefore, in all the years I've been trading, specifically 7 years, I've only traded and currently only trade the euro-dollar currency pair. And I recommend it to you. Why? Well, basically because it moves during the two most important sessions, the London session and the New York session. So, we're going to have volatility, we're going to have movement, which is what we're interested in during both sessions, London for the euro and New York for the dollar. Therefore, we'll have volume and movement in both sessions. I also recommend it to you because focusing on just one currency pair will help you become more professional. Unconsciously, from looking at this chart every day, if you showed me the chart with my eyes closed, I could tell you very precisely where the price is, what the high and low are, and which liquidity point is closest to the price at this very moment. Why? Well, basically because every day of my life, from Monday to Sunday, I look at the chart. Even though the market is closed on Saturday and Sunday, I still look at it. Why? Because I love trading and I love knowing what the price is doing and where it is at every precise moment. So, sticking to just one currency pair is a very good option and I recommend it to you. The first thing we need to keep in mind is that price moves from high to low, from liquidity to liquidity. Why? Well, basically because all the market liquidity is found at the highs and the lows. As we can quickly observe here, we see that every time the price breaks a high, it tends to react. And also, every time it breaks a low, it tends to react. As you can see here, the price manipulates that liquidity above that high. We have it here on the 4-hour time frame and the price tends to react. Where is the price headed? Well, ultimately, it will take out all the liquidity that is down here at the lows. Why are these highs and lows so important? Well, in a completely rational and easy to understand way, we can only protect our stop losses and set our take profits at the lows and highs. Everyone you know usually protects themselves at the lows and highs when they're selling. So, where do they also tend to set those take profits? At the lows and the highs. Therefore, at the highs and lows is where all the market spending orders are usually found. Buy limits, buy stops, sell limits, sell stops, take profits, and stop losses. So, when the price manipulates or sweeps a high or a low, it tends to react with considerable force. Obviously, it's not always going to react, but trading is a game of probability. The higher the probability is on our side, the better and more profitable we will be. Therefore, when the price sweeps a high or a low, that's when we'll be watching to enter, either to sell if it breaks a high or to buy if it breaks a low. What can we observe here? Well, the price has broken this high that we have here on the 4-hour chart. I think even a beginner who's only been studying trading for a month would spot and mark this high. I think it's very easy to interpret this as a high. unlike the order blocks in the smart money strategy, since that's very subjective. However, marking a high or a low in the market is something practically any beginner can do. Once the price has manipulated that 4-hour daily or 1-hour high, we move to a lower time frame. For what purpose? To look for trades with smaller stop losses and higher take profits. For what purpose? To look for that risk-reward ratio that really interests us, because my trading strategy is intraday. I'm not a swing trader, since I like to enter and exit the market on the same day. Once we've dropped down to a 1-hour time frame, we would be marking our imbalances between the first and third candles. The moment an imbalance is mitigated, for me, it stops making sense. A lot of people mark all the imbalances even if they have already been touched, but for me, those lose their validity. The ones with the highest probability in the market are the imbalances that have not yet been mitigated. Here we would mark the two remaining ones, the two H1 1-hour imbalances that are left. And the next thing we would have to do is wait for the London session or the New York session, since my trading strategy only operates during those two sessions. The London session, which lasts 2 hours, from 9 in the morning to 11 in the morning, Spain time, and from 2 in the afternoon to 4:30 in the afternoon, Spain time. I will only take trades if they are within that time frame, for two reasons. The first is because the vast majority of manipulations and price distributions occur during those hours. That's when the interbank algorithm starts to operate and begins to mitigate those banking transactions. Therefore, the price tends to manipulate and distribute. Outside of those two sessions, I don't recommend trading. And the second reason is that if I trade all day and keep an eye on the chart all day, what will happen is that I'll end up entering very unfavorable scenarios and setups. Why? Because I'm going to try to make the most of the time I'm in front of the screen. And as you can understand, this is very bad. This trade, these zones I'm showing you, are not back tests like most gurus do. I sent this zone to my students that very same day. I told them I was waiting for the price to mitigate those zones so I could look for sells. I'm going to leave it here next to me around this area so you can see that it's completely real, and that on that very day during the London session I told my students, hey, we're looking for sells in this area. Once the London session or the New York session has opened, here we can see that it's 9 in the morning. You can see it down here. We see that the price starts making corrections, that is, changes in structure. We can see how the price manipulates the upper high, makes a change of structure below, and starts to create imbalances. Where should we have entered our trade? Well, we have several entry time frames. Personally, I use from 1 to 5 minutes. What for? Well, to have a higher risk to reward ratio, since if I look for my entries on a 15-minute time frame, my risk to reward will be much lower. Here, what we should have done is that once the price has left this imbalance between the first candle and the third candle, what we'll do is place the entry either at the first imbalance, this one right here, which we'll also mark so you can see it, at this point or at this point. It doesn't matter. Let's say we entered at this one, we'll cover ourselves above, and we'd be looking for at least a 1 to 2 risk-reward ratio. Here we can see that once the price touches that point, it leaves different entry opportunities. Here you can see that it leaves another imbalance, so we could have re-entered, having 2 trades in that same setup. Here we see that the price easily gives us the 1 to 2 ratio and hits take profit on both trades. Where is the price heading? Well, it goes to liquidate the first low that's pending here. We see that it takes out this low, and the second pending low would be this one here. We see that it takes it out with total ease. So in both the first and second trade, we could have achieved that take profit. Not only that, but I also pointed out the second entry to my students. What was that second entry? Well, during the New York session, I marked this order block here for them. I'll also show it on the screen so you can see I'm not lying and that it's completely true. And I told my students to keep this order block in mind. I'm gonna attach the screenshot here so you can see right here that it's completely true and that I got both zones right, both the London session and the New York session. I always send my students the zones hours in advance. And obviously when I enter a trade, I also notify them ahead of time. Why is this order block here valid for me? Well, because it has an inducement. As you can see, before the price enters that order block, what it does is create liquidity, a pending high. Once the price creates that inducement, it makes smart money traders believe the price is going to go down, but no, the price goes up, sweeps liquidity, and finally the distribution begins. And I took this entry as well, along with all my students. I'm going to leave the screenshots here so you can see that it's completely true and totally verifiable. With this trading strategy, I've withdrawn over $300,000 in payouts. It's a very simple strategy. And with just 2 hours in the morning or 2.5 hours in the afternoon during the New York session, that's more than enough for you to be profitable. This video is coming to an end. I hope everything has been perfectly clear, and if you want to know more about my trading strategy, you can find a lot more information on my social media. My Instagram is linked below in the description, and there I post free explanatory content about my strategy almost every day. In fact, sometimes I explain in great detail all the trades I've taken during the week, so if you want to trade the same way I do with this strategy, I invite you to follow me on Instagram. That's all for now. See you in the next video.